Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on February 28th. We close out February this week. Kind of forgot about that.
Yeah, short
It's
month.
yeah. So okay, Ian here, joined across the table by Joseph Tazzulo. Should we call you Tuz or Joseph on here?
Either one's fine.
You go by Tuz typically across the office. I don't know if you want the clients to know that, but
Yeah, well, they can call in and ask for Tuz, and people would know what they're
there you
talking
go. Yeah,
about.
we know who to get the phone to. That's for sure. But yeah, it's I think this might be we're talking. So we're recording this on Thursday, the 27th.
Mhm.
After market close, which usually we record these in the morning. Good thing we waited till after the close today to talk
Yeah,
about markets because things changed quite a bit this afternoon.
yeah, there was a lot of activity right after 1 o'clock. Fed speaker, and then we had some tariff talk this afternoon as well. So we've seen some weakness there.
Yeah.
But I think when you look, kind of zoom out just a little bit on the market, other than just today, and look at the last couple of months, a lot of sideways action on a lot of these names, whether we look at like price action on the charts or like some of the shorter term indicators even.
Hmm.
Um, and then I think probably the biggest theme is the weakness we've seen in the mega caps as well. We've seen those soften quite a bit over the last several weeks.
Yeah. And I mean, so when you look at just something like the S&P 500, right? Like I think I had some meetings this afternoon, went in, markets were doing okay, came out, S&P's down like 1.2%, right? I think through close, a little bit more than that, maybe. It moved to a sell signal on its default chart, but it's not the first sell signal we've seen this year. To your point, we've seen a little flip-flopping. It's a pretty definitive range from 5,800 to 6,100 and for the core market benchmark,
Yeah.
right? Still long-term uptrend, but you can definitely see that kind of consolidation really since the beginning of December
Hmm.
is kind of
Hmm.
where we've been at. But you pointed out a chart and looking at even more focused mega caps, even more consolidation from XLG. Similar but slightly different picture, right?
Yeah, yeah. And I mean the fund score is still really high. It's got a fund score of almost 5.5,
So XLG top 50 out of the
top
S&P
50
500
ETF.
by
Yeah.
market cap, right? Yeah.
Yeah. And we zoomed in a little bit, looked at the 50 cent chart, but you still see like 4 years of data on there. So it's not like it's too wild. Um, found resistance at 51.50, which is tested 5 times since December and failed to break above it.
That's pretty
Now,
notable.
yeah, that's a that's a big area of resistance.
Yeah.
And now we're right at the bottom of that range, right at 49, which we got to today. Now there's not much support offered below that, below 49. Got old resistance at 47.50, which old resistance you'd like to see act as new support in a
Hmm.
strong market. If that fails, then you're looking at something like 44.50 for true support
Mm.
for that uncovered column of those.
Yeah.
Um,
That's not, that would be a little bit of a drop.
that'd be that'd be more of a drop.
Yeah.
Um, Now, we've talked about this a lot in our research the last couple of weeks, this kind of consolidation across different asset classes too, like with semis
Yeah.
has been a talking point.
I mean,
Like,
Nvidia is the same price now as it was in June of last year.
yeah,
I mean, it's just you've seen consolidation, and even so, like looking at XLG just as current representative now. I mean, it's just above its 50-day moving average. We were talking about some other areas. You're just seeing a lot of kind of sideways movement
hmm,
across the board, especially in the bigger cap equity areas. Those areas that have been high flyers, like your Nvidia, like your semiconductors. I mean, they've done poorly, not as good as other areas, and they've just kind of moved sideways.
yeah.
Right? I mean, that was it's not the end of the world to see something move sideways. It's better than dropping.
Well, the thing is, we saw, Nvidia got kicked out of a couple of our some of our most popular
Yep.
models at the end of January.
Right.
So, this isn't necessarily a surprise that we're seeing the relative strength picture change a bit underneath the surface.
Yeah.
But when you start to get the heightened volatility and, if you have a lot of tech or consumer cyclicals, which were kind of the high momentum areas other than maybe something like financials, which actually did well today,
Yeah.
um, you start to see those drop pretty fast. You're getting some letdown out of the momentum stocks, which is it's normal. It happens.
It is. Yeah, it's totally. And I think that's an important thing to keep in mind. I mean, when looking at momentum as a factor, right? I think I was watching CNBC yesterday, or maybe I think it was Tuesday.
Mhm.
Um, and it was just headline momentum blow up, momentum blow up, momentum blow up, like your Palantirs, your AppLovin, which were high momentum names, some of the highest weightings and some of the strategies that we're looking toward.
Yeah.
Saw some pretty weak days
Yeah.
for a couple days there, but there's a lot of other stocks that aren't Palantir that they're still maintaining some strength and
Mhm.
not falling like that, right? And I thought it was interesting though when I was watching CNBC, they were headlines were talking about momentum blow up, but everyone they had on there was talking about how they thought the momentum blow up was about done.
Yeah.
That it's not the freak out from an expectation of oh my gosh, it's time to move away from everything that's doing well. Seems to be kind of a consensus that it's isolated to some of these highest flyers, right?
Yeah. Yeah, until we see the like core really start to break down, which I'm looking more like the mega caps and things
When
like
you say
that.
core, what are you referencing?
Like either the S&P 500 or like in this market, probably the mega caps like XLG, I think is a really good representative.
Right.
Like where XLG goes, I think that's where the market's going to go. Um, I mean, RSP, like the equal weight's done okay this year, but you zoom out a little bit, it's still not the best place to be, especially on a relative basis. So there isn't a ton for this market to fall back on. If those mega caps start to turn around, which I think that's the concerning thing. And that's where I think most focus should be right now. But again, even if you look at XLG, we are at that support at 49, but we're not in heavily oversold territory. So it's not like we're in a washout situation where you just go in and jump in and buy
Yeah.
something like this. And
We need to see a break out of that range to give more of an indication.
exactly, yeah. And there's this guy, Jimmy Jude on Twitter. He's an ex floor trader on the Chicago Exchange. He's been around for a really long time, but he used this analogy of um, when you got to break out of these ranges, sometimes it's like trying to knock over a soda machine, and right before you knock it over, it comes back in your face
Smack you over.
as fast as it's going to before it goes the other way and goes down.
Okay.
So we'll see if this is kind of like the reaction of it's coming back really fast, and then the next step is like it's going to start just going
So
up.
the in that analogy, the soda machine falling over is actually good for markets.
Hopefully,
Hopefully.
you get that
Or the soda machine falling down as markets falling
you
down.
get like these sharp reactions right before you
Yeah.
get the break out of this
Right,
range, which
right.
is
That makes
essentially
sense.
the point. Um, and it reminded me of like right after the regional bank stuff in March. I remember April, May, and even early June, there was
Of
this period
23.
of 23.
Yeah.
There was this period of just consolidation and sideways movement, and we finally broke out of that range, and we really never looked back after that point
Yeah.
for, you know, the rest of that year, and then even in most of 2024.
Right.
So these ranges I think are really powerful. Whichever way we break out of it, I do think you're going to see a pretty big move. Like we've been building up for it for a while.
Yeah.
Um, and if you look at more focused areas like we talked about earlier, like semiconductors, let's see, I had SOXX up here. Yeah,
Yeah.
so that dropped below score three, which is concerning, but there's a ton of support here right around 205,
But
210.
to your point, we had semiconductors. I mean, this is not new in terms of them falling out of favor. We had semiconductors rotate out of models last year, like
Yeah.
semiconductor representatives. NVIDIA moved out of some of our like top Nasdaq 100 top 10 models back in January. And so obviously those every trade isn't perfect type of deal, but we were seeing weakness across the board for semiconductors before this week.
Yes,
I mean,
exactly.
it wasn't, and
It's
when
not
we
an
say
isolated
weakness, it's
incident.
not like it's dropping like Palantir.
Mhm.
When we say weakness, it's relative weakness, right? So it's
Yeah, yeah.
if it's just moving sideways, if other stuff's going better, it doesn't matter that Nvidia might not be down 10%. We want to be in the things that are going up, right?
Yeah, and I think
We're
an
pushing
encouraging,
towards strength,
encouraging thing today is that financials did pretty well,
right? Which has
which
been
is
number one in the dollar ranking since what, last July?
yeah, for almost a year now,
Yeah,
closing in on, getting close to it. Um, so again, these consolidation areas, and I think part of the problem is people not you get hooked on these narratives like the
totally.
AI and the semiconductor narrative, and like they did so well, and it's still kind of in the back of people's minds. But the price action over the last several months says, hey, you got to be a little bit careful here. It's definitely slowed down from
Yeah.
not only an absolute perspective, but from a relative
And
perspective
at the end
too.
of the day, too, if we see some of the highest flyers, or we see the S&P should move, get some sideways movement for a prolonged period of time,
Mm.
that's not a bad thing for momentum strategies for stuff like we do. As long as, to your point, as long as you get some, we were talking beforehand, you said need some time to see the change, right?
Yeah.
But I mean, if you just get continued consolidation, for some of these areas, momentum stuff can still do well because there are going to be things within that inventory that are doing well and things
Hmm.
that aren't doing well.
Yeah.
And as long as we're avoiding the things that aren't doing well and overweighting the strong stuff, is what when the index moves sideways, that's an opportunity for trend following relative strength approaches like ours
Hmm.
to offer even more insight than they could maybe over the prior couple of years.
Yeah, and we're not even only seeing it on like a domestic equity front too.
Right.
I think when we look at broad asset class rankings, whether it's like Dolly or even the asset class group scores, we look at some of those major groups. Those are starting to kind of clump together a little bit closer. On the asset class group scores page, the S&P 500 index funds, or what we just call the core,
The
kind of
core, yeah.
is still like well and above the strongest area of the market. But when you look at like all US equity diversified, so you get more of the mid and smalls in there, commodities, and then all global international diversified.
Mhm.
They're starting to get really close
Because you're
together.
seeing international continuing to hold up a lot of strength broadly. There's some
Yeah.
areas that are doing better, some that are doing worse, but the internet, I think most international equities representatives are outpacing the domestic counterparts on a year-to-date basis.
Yeah.
I mean, we've only been 2 months of the year at
Yeah.
this point, but still,
Yeah. We'll see if that sticks. I'm
yeah.
still a little skeptical until we see some of these
Oh,
big indicators
yeah. I think
change.
it's hard to not be skeptical for in
Yeah. Yeah.
international
Yeah.
equities. I mean, one of the other things, I mean, what's while we were sitting here talking, Chuck was talking about in the research chat, looking at this is only the seventh week in history that the bearish reading for the AAII sentiment is above 60%. So what is that showing us? That a lot of more people are going bearish, right? I mean, people are seeing stuff, they're seeing the volatility, they're seeing some of the biggest names. We were talking about the highest flyers from a momentum perspective that starts to blend into the meme stock. Like,
Yeah.
I've seen a ton of memes about Palantir over the past week or two, right?
Yeah.
Um, and when you see stuff like that take a big hit, I mean, it gets in people's heads, right? And people might get bearish about, I mean, especially all the other news coming in. Other times when you've seen really large bearish readings, that typically tends to be like a kind of a contradictory indicator. That goes,
Yeah.
a lot of people get bearish, maybe the markets contradict that a little bit.
Yeah.
I mean,
Like
it
I
could
would
be.
not be surprised at all if we saw this test of support, it hold, we see a bounce here. And then I think the move after the bounce is going to determine where I think we're going to break out of this range pretty soon.
Yeah,
Given how things have finally started, the volatility's picked up a little bit.
yeah.
So it may give some more juice to the upside in the short term. And if that holds, then I think we'll get that break,
We'll see. I mean,
hopefully.
that's why we follow the
Yeah,
follow the
that's
price,
why we
follow the
wait.
trends.
I mean, we look for the breakouts, of course.
Yeah, I mean that's in looking at it from like an RS perspective. If we're looking at like the broader rankings, like with Dolly, right? I mean, we were talking. We haven't seen any changes in the
Mhm.
Dolly, not the sectors, not the asset classes, really. Your point on the group scores, everything's kind of consolidating, but when you look at a relative strength chart, consolidation just doesn't leads to no changes,
Yeah.
kind of. And so I mean, we've seen like a little bit of movement, like consumer cyclicals has sold off quite a few signals
Hmm.
since the start of the year, but it's ranked fifth, like dead in the middle.
Yeah.
So it's not like it's the highest momentum. Like financials, to your point, it's gain signals doing pretty well on Thursday when we're recording this too, whereas
Yeah.
everything else isn't. So there are definitely pockets of the market that you can look that can be looked toward for more consistency, even in the midst of volatility.
Yeah, and when you really get these like sell-offy type of events, which I wouldn't even call this, I would call this just like continued
Yeah, it's not a. I
consolidation.
mean,
When you see like sell-offs, everything's down, not
right.
necessarily just like some of the market and some of the market's up. I think we're seeing a recalibration.
That's a good way to put
Um,
it. Recalibration. Yeah.
yeah, of some of the prior leadership has taken a hit. Like consumer cyclicals is usually one of those sectors where there's a lot of dispersion. Like the leaders are really leading, the
Right.
laggards are really lagging.
Yeah.
We saw the leaders start to really slow down in that sector a bit. But when you look at just sector by sector, financials and generally tech holds up pretty well. Like,
Tech's been pretty interesting, and I think when we're talking about areas that have done well, and so I mean Apple like that. If
mhm.
you go to Apple, it's obviously like it's back and forth with Nvidia for the biggest stock, right? That chart looks pretty good. Three consecutive buy signals, pulled back about, I mean, 1.2% today, but I mean, it popped up on screens for some of the screens we look at for like the roster ad and stuff about like favorable reward to risk ratio, high attribute name, top half of its matrix. Like it's hard to make a bad case for Apple right now.
Yeah, and I think the thing is you got to when you look at, Microsoft's another good example
Different
where
picture.
it doesn't look as good necessarily, a lot of sideways action, but you are getting close to these support levels around 388,
Yeah,
392.
yeah,
And I think you lean on support until proven otherwise.
right. If you break
Um,
those to the point earlier when you're talking about other areas, I mean, you're looking at like 364 in the trend line if you start getting lower. So I mean, that wouldn't be great
no,
for
that would be
Microsoft.
great. So you want that support to hold, but I think with the consolidation, one of the bonuses of that is you have some clear lines in the sand
Mhm.
established for, hey, if this stuff really starts to break down, whether we're looking at broader representatives like XLG, SP 500, or on an individual stock basis, say, okay, I need to de-risk from this area that I have
Mhm.
exposure to because it broke down, or it's at support, it's pulled back a little bit, but it hasn't broken yet, so I kind of need to stay with the trend and hold on to it.
Yeah. Yeah, and we're talking a little bit before with Chuck too about like what indicators and stuff can we watch. We talked about a lot of stocks in a lot of different areas
Mhm.
for in terms of like near term stuff. I mean, I think my favorite because it's Chuck's favorite is the 10-week for the
That's my
S&P
favorite. It seems to be the
TWSPX.
most
Well,
reliable when it gets
you
washed
you
out,
can't doubt Chuck. I
especially.
mean, it's like he has
Yeah.
a pretty good insight into the helpful indicators, let's
Mhm.
say. 10-week TWSPX sticker on the side. It's a percentage of stocks in the S&P 500. They're trading above their 10-week or 50-day moving average. When you see consolidation across a lot of these names, the only thing that's going to do is just going to make that 50-day moving average closer to the price. I mean, a lot of these areas are just bouncing around that 50-day moving average with each of these kind of 1 to 2% days that we've had over the past few weeks. And so if you look at the chart, it's actually, I think, pretty interesting. It's right around 50% on
Mhm.
so half the stocks are slightly more than half the stocks prior to today's move were above their 50-day moving average. So it's kind of middle of the road for that indicator too. I
Yeah.
would expect when we break out of this range, whichever way we break out, you're going to get some sharp movement on an indicator like this because it can change quickly.
Yeah.
We've seen it go coast to coast pretty quick.
Mhm.
And so that could be a good one to keep an eye on if we start to see it's a near term participation reading, right?
Mhm.
If it gets down to low levels and points to look toward there, low levels, and then reversals up, being like we might be out of it. On the other hand, if we push back up above 70, above 80%, Chuck's identified that before as like a breadth thrust area, being that,
Mhm.
okay, that might be a more of a significant sign that we're exiting that range to the upside, right?
Yeah. Yeah.
I think that's a pretty good one to keep at the top of people's list.
For sure. And then one thing I'm also looking at, I was looking at this earlier today. Um, but if you look at the VIX term structure right now, so like spot VIX versus what the futures are pricing in for the VIX, spot VIX is it's higher than the next couple of months on the VIX futures contracts. Which usually it's either one of those situations where you're either really going to fall to bed, that's a small percentage of time. Most of the time you see the VIX back
So
off from those
explain that a little
levels.
bit more for so spot VIX versus futures, like explain the difference there for people that for
Yeah,
like
so there's the spot VIX, which is just everyone's kind of familiar with that calculation, just using the implied volatility of options on the S&P 30 days out.
30
Um,
days up, yeah.
yeah. Now, there's VIX futures contracts
Right.
too, which are tradable, but they have you can go 1 month out, 2 month out, 3 month out.
Yep.
Now it's usually upward sloping, so usually the ball's priced in higher in the future than it is
Given
today,
the uncertainty factor.
given the uncertainty
Yeah.
factor and things like that. When you start to see the spot VIX move above what's being priced in the futures contracts, that's often at times where you see spot VIX start to back off, which I think would obviously correlate to some type of a
Getting
bouncing
a little
or
bit ahead of itself.
yeah,
Yeah.
exactly.
But I mean, you're talking about a bounce in the VIX. I mean,
Well,
we're been
I'm talking about a bounce in equities as it correlates to a back off of the VIX.
right.
Yeah,
But
yeah,
like the VIX bouncing now, I mean, it's funny. You look at it on a chart. I mean, we just tracking like just a normal price chart of it, and you see like a big spike. I'm like, oh, that's a spike. I'm like, jump 2 points. We're considering that a spike now. You know what I
yeah,
mean? It's with a little bit different than like throughout 2022. I
yeah.
mean, we were bouncing 25 to 35, like coast to coast, back and forth.
Yeah, yeah. It depends on the environment you're
It's just
in.
different. Yeah.
I think the term, like the term
That's it.
structure,
That's a different way to look at it.
yeah, I think that's the way I like to look at it
Right.
more than
Do
anything.
we have that on the site?
We have the
We have the
We have VIX 3 month, but I don't think we have the VIX futures contracts
okay.
on that. You can easily Google it though,
Yeah.
so you can look at that, and you know, it's one of those situations where the market either really falls apart, again, small percentage of the time. Most of the time, you see the VIX back off, and you see some type of bounce from these kind of lower levels.
Hmm.
So I tend to say, hey, we're at support. As long as that support holds, I'm going to rely on it. And I think we could see a bounce here on a, next week or two type
Yeah.
of basis.
Yeah.
Nothing long term. Like we talked about earlier, when we look at our long term asset allocation tools, we haven't seen anything to suggest, hey, you got to start rotating out of these
Right.
big
Which is why we're looking at the
overweight
minutia
equities or
here. I
anything.
mean, that's
Yeah,
why.
we're talking about the short term action because
Yeah.
the short term action the last week or two has been notable.
Yeah.
Um, but in the grand scheme of things, we haven't seen anything to make any material changes
I
to
think
asset allocation.
right. Keeping perspective on where we are and what we're like, we're looking at the short term stuff because the long term stuff isn't moving. Right. And
Yeah.
so that at the end of the day, that's a good thing. So
Yeah.
but that's why we have the other stuff too, to continue to keep an eye on some different areas. And I'm sure, like it has been seemingly every week for the past month, there's been new headlines, new stuff popping up. There'll be new stuff next week.
Oh yeah.
Yeah, it'll be an interesting time because I think the tariffs supposed to get implemented on
April
April 4th,
1st,
1st, 4th.
2nd,
I
4th,
think
something like early April.
about a month. Yeah, and so there'll be a lot to talk about over the next few weeks, I'm sure.
Oh, definitely. Yeah. Yeah. And whenever the VIX starts to get above 20, which it closed at 21.19, um, you know, that's when I usually start to say, hey, it may back off here. That doesn't mean there's not any more downside, or there couldn't be more downside on longer time frames, but like on a 1 or 2 or 3 week basis, usually that's a good sign we may see
Yeah,
see the
and
volatility back
with the
off a little bit.
exception of the yen carry trade deal last, what was that, August? Um, 20s really kind of the 22.50, low 20s range. It served as a kind of peter out point
Yeah,
for the past year or so.
yeah,
That's a good point to keep an eye on there. So keep an eye on the VIX, keep an eye on the 10 week, and then as Miles says, keep an eye on the charts, right?
yeah, exactly. I think the chart's going to be the most important thing.
Yeah,
Those ranges are the main thing I'm watching right now,
yeah,
and those things start to either break out to the upside or to the downside. Like on the S&P, if we start to break below 5,800, 5,750, could get a bit hairy.
yeah.
Definitely. So, but until that happens, then, there's really not much to do.
Yeah, or if
Um,
that happens.
if that happens.
Yeah,
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 exactly.
yeah. We'll keep watching. Cool. Well, thanks us for hopping on here
Mhm.
later on a Thursday. Thanks everyone for tuning in with us this week. We'll be back to touch base on anything next week.